on Business Incorporated today. Africa and European Union set to collaborate as Russia boycott looms. HP targets banks in malware campaigns. Fertilizer supply halted in Ghana, and that's because of debts to fertilizer producers. Hello and welcome to Business Incorporated on Channels Television. I'm Ini John Mekwa. We'll start with markets. However, most markets in Africa are closed for the Eid holiday. But we have South Africa, the only market trading at intraday. The JSE was down almost 1.5%, which we say is the impact of the holiday. And elsewhere in the Middle East, all markets are still closed from yesterday, and they're all celebrating the Eid holidays. Leaving Africa, we go to the European Union, to Europe now, where Germany has begun asking its biggest industries how much natural gas they'll need in the event of sudden cutoff from Russia imports. The survey is part of preparations for a worst-case scenario, which seems increasingly likely given the event of recent days. Well, we have Stephen Beardsley now joining us from Berlin to tell us. Stephen, it'll be interesting to know why this survey is coming at this time. We do know that it has been looming for a while now, but why is Germany taking this step at this time?
Right, this may sound alarming when you hear about it, but this is actually part of a longer process that began in late March. And that's when Berlin initiated the first part of a three-step gas emergency plan. And that is with the expectation that possibly there could be a cutoff of Russian gas in the weeks or months ahead. That could come from either the Russian side or it could come from the European side as countries perhaps put a gas embargo in place. So this plan is really meant to take a look at what would have to happen, what we could expect in the days and months ahead. Now, Germany is one of the largest importers of natural gas from Russia. It currently makes up 35% of all gas imports, and so that's significant. Replacing it would be difficult. We know that homes would be prioritized in the winter when it comes to heating with the gas that remains, and then it would be left to industry to divide up the rest with guidance from the government, of course. And that's the purpose of this survey, is to really gauge how much gas is needed by industry. What we should expect is that large producers, raw material producers, for example, steel, chemicals, those industries are going to require lots of natural gas as part of their production processes. Also, of course, utilities that produce electricity, although some of that can be moved over to other sources such as coal. So it's really going to be those raw material producers that are going to be hit the hardest.
Yeah, well, but how likely, we've been talking about the possibility of a cutoff from Russian gas, end of the year, the long-term plan. How likely is this gas cutoff at this point?
Yeah, this has been the question almost every day since the war started. When can something come? When will something come? There is more reason to worry in recent days given what's happened with Bulgaria and Poland. In that case, Moscow has cut off supplies to both of those countries. It's also been putting more pressure on larger EU countries to pay for their natural gas in a different manner, that is with rubles, to support the local currency there instead of euros and dollars. Those are the currencies called for in the contracts between EU member states and Russia. Now, the EU is discussing and consulting with member states about what this demand means, but the general line that we've heard so far is that it does consider Moscow's demands a breach of contract and that it will not pay in rubles. If that's the case and Moscow does follow through on its threats, then one could expect a cutoff at any time. However, we have to note here that gas is a very important revenue source for Moscow, especially as other revenue sources start to dwindle. Right now, the EU is discussing an oil embargo that would probably take place in late summer, and that would shift even more reliance on gas for the Russian state. We should also note that throughout this war, gas infrastructure in Ukraine has been spared from Russian attack. Another signal that those exports are very important for the bottom line in Russia.
Well, very interesting points to note there, Stephen. Well, let's move away from that and find out how is the market?
Right, what we've seen so far is that London reopened today after being closed yesterday for a holiday, and it immediately mimicked the losses that Frankfurt and Paris saw yesterday. However, we are seeing good signs already out of Frankfurt. Deutsche Post, which owns DHL, the package delivery service, showing some positive earnings in its latest releases, and that's helping buoy sentiment with the DAX, and it's nearing its significant value of 15,000 points. That's an important benchmark for the DAX, and that's a gauge for many investors of how sentiment here is doing right now. But of course, all eyes still on Wednesday. Tomorrow, that's when the Federal Reserve in the U.S. will announce its interest rate hike decision. What's expected is half a percentage point, but there's talk that it could be a little bit higher. And of course, that will have a ripple effect around global markets.
All right, Stephen, thank you so much for that update. Enjoy the rest of your day. So let's move to UK now. We had Stephen talking about the markets in London. We'll take that in a bit. But first, Juliana, good afternoon, and good to have you back after the holiday, short one, I say. But the latest survey of purchasing managers found that selling prices rose at a record high last month. Is this just part of the signs of this year being the year of the squeeze?
It is the year of the squeeze, unfortunately, and it's good to be back with you as always. We've got the first of a slew of economic data expected this week ahead of Thursday's really important gathering of the Bank of England's Monetary Policy Committee. I'm sure they'll be having a very close eye on the PMI data, because we know this is the only real way we get to have a forensic look at Britain's private sector. Interest rates in the UK currently at 0.75%. We're expecting a hike of a quarter of a percentage point to about 1%, which will be the highest in about 11 years. But back to the manufacturing data, pretty good. For April, it's risen to 55.8 from 55.3 in March. And that March number was a 13-month low. Lots of economists have attributed that to the invasion of Ukraine by Russia. So in terms of the headline, it's good. But if you dig a little bit deeper, there are concerns. 55% of manufacturers in the UK had to hike their prices last month. That goes without saying. We know inflation is currently running at a 3-decade high, and they are starting to see a loss of demand. Of course, during the pandemic, lots of manufacturers in the UK were not trying to import, or lots of consumers were not importing from China because of the lockdowns. Lots of people were trying to find inventive ways of, getting products closer to home. Manufacturers had a bit of a boom time. That's slowing down now. And of course, as well, Brexit is still an ongoing issue for many businesses up and down the UK. And there are border checks and bureaucracy, long queues, supply chains. So they are still haunting investors. So it is good that we have seen an increase. But then, of course, the outlook is a little bit gloomier, and we'll just have to wait and see what happens in the war. We've just had Boris Johnson, actually, the Prime Minister, given a speech to the Ukrainian Parliament. This is a historic speech, very Churchillian, as they say. We know that Winston Churchill, considered the most important leader in British history, is a mentor, shall we say, to Prime Minister Boris Johnson. So he definitely evoked that, the first Western leader to speak to the Ukrainian Parliament. Really important piece of news. But yes, we'll just have to wait and see how this war turns out, to how it is going to affect the British economy.
Affect everyone, Juliana. But we now have this thing called the Jobs Alliance on high streets. What's that about?
Yeah, this is a really important story, actually, that's been picking up pace over the past couple of weeks. It's all about business rates for retailers. So we're talking about stores that you would see up and down a high street, and also landlords in big department stores such as Westfield and Selfridges and other places like that. They have really been taking the government to task over the past couple of years. Again, this was highlighted during the pandemic because they just didn't have the footfall. Of course, we know for a very, very long period of time, many of them had their doors shut. There was a brief period where they didn't have to pay the rates. But now that they're reinstated, they just feel that it's a completely unfair system where you've got the big tech titans like Amazon and others able to have pretty large warehouses within the UK where they're able to quickly get that rapid delivery, but they're not paying a business rate as is a high street retailer. So they have joined forces to form the Retail Jobs Alliance. Some really big names on there, such as the CEOs of Greggs, Waterstones, Tesco, and some of the other big grocers. I know Dame Sharon White, who's the head of John Lewis, she's also been at the forefront of this as well, trying to get the Chancellor Rishi Sunak to overturn what they're being described as decades-old, archaic business rates, so that things can be much fairer. One of the arguments or proposals put forward is that if you are an online retailer and you do have a space in Oxford Circus, you shouldn't just be charged the monthly rent. You should also be charged as part of the business, just so that it can be much more of an even playing field. I've heard that they've already written to the Chancellor, so I'm sure this story is going to pick up pace. Perhaps there could be an announcement from the Commons dispatch box by Rishi Sunak later this week.
All right, I will certainly be following that. And how's the market looking at this time?
Not great, very much trading in the red at intraday. Again, we got interest rate decision by Jerome Powell this week. Then, of course, we've got our own domestic rate decision. So lots of investors are waiting on tenterhooks to see where exactly this is going to go. But the FTSE All-Share in intraday is down 0.75%. The FTSE 100 down by 0.80%. And the FTSE 250, the domestic market, that's down by 0.64%. In the currencies market, the British pound is currently trading up against the US dollar by 0.02%, also trading up against the euro by 0.09% and up against the Japanese yen too by 0.03% in A.
All right, Juliana, thank you so much for that update. We'll talk to you again tomorrow.
Thank you.
Let's move to Asia now, where stocks across Asia Pacific mostly declined today as Australia hiked its interest rate for the first time in more than a decade. Talk about the timing, man. There's hike of interest rates everywhere. Australia's S&P X 200 declined 0.42% to close at 7,316.20, and the Australian dollar last declined to 0.70 after jumping to levels around 0.71%. Australia's Central Bank says that the cash rate will be increased by 25 basis points to 0.35%, and that's the first hike since November 2010. Looking at all the markets now, Hong Kong Hang Seng Index edged down 0.1% in the last hour of trade. Shares of Alibaba earlier fell more than 9% before last pairing losses to decline 1.73%. We head to the U.S. now. Stock futures were flat in early trade after the major averages staged a big reversal, and then it started declining. We see that Dow Jones Industrial Average futures traded lower at 0.43%. S&P 500 and Nasdaq 100 futures also were in the negative, almost 0.5% each. Yesterday, the major averages posted a wild up and down session, with the Nasdaq Composite rising 1.63% in a late day comeback, despite falling as much as over 1% earlier in the day. The S&P 500 rose 0.57% after hitting a new 2022 low earlier in the session. Meanwhile, the Dow gained 84 points as its session lows, and then the Dow was down more than 400 points. We'll take a break now. When we come back from that break, you'll find out what is the biggest threat to African financial sector at this time. That'll be part of what we'll be telling you on Business Incorporated here on Channels Television. Welcome back. You're still watching Business Incorporated on Channels Television. The Nigerian government and Morocco are planning to build the world's longest offshore pipeline and second longest pipeline in the world to carry gas from Nigeria to Morocco, running across 11 West African countries. Well, the partnership is between the Nigerian National Petroleum Company Limited and ONMHYM of Morocco, and it was originally signed by the two countries in June 2018. When completed, the over 7,000-kilometer-long gas pipeline will link Nigeria with Morocco across 11 West African countries and extend to Europe. It will be the longest offshore pipeline in the world. And closely related to that, European Union is stepping up cooperation with African countries to help replace imports of Russian natural gas and reduce dependence on Moscow by almost 2/3. This year, 2022, countries in Africa, in particular the western parts, Nigeria, Senegal and Angola, offer largely untapped potential for liquefied natural gas. The communication on external energy engagement is set to be adopted by the European Commission later this month as part of a package to implement the bloc's plan to cut energy reliance on Moscow. We had Dr. Ayodele Onu, he's a partner at Bloomfield Law Practice, sharing his thoughts on this and says that this plan should have started long before now, but even now, it is time for African countries to get more creative in their approach to investment.
Security of energy demand and security of energy supply. In terms of security of energy demand, it improves the demand for, or it has the tendency to improve the security of energy demand from African countries like Nigeria, from Angola in particular, those two in particular. And that can, like I said, improve income, improve balance of trade and balance of payment. But we need to work aggressively on infrastructure and interconnection. For example, for a while, there's been the Nigerian gas pipeline system and project that is supposed to connect the AKK, that's the Ajaokuta Kaduna Kano, move pipeline for move gas from the south to the north, and then be able to move to North Africa. We need to then connect to Algeria on one angle. You also have the West African Gas Pipeline Extension Program with Morocco. So if these projects go on and can be completed quickly, then that benefit is there. Now, the only challenge I see from a gas pipeline point of view is that those benefits may not be immediate. They may be more immediate from an LNG point of view with Train 7, depending on whether they have a lot of contracts where the gas available is already sold under those contracts.
Now, away from the oil and gas sector, now, what is the biggest threat to Africa's financial sector? Cybercrime has been on the rise globally in Africa, especially with the financial services sector being one of the biggest targets. Well, HP Wolf Security detected a targeted malware campaign against an employee of a major African bank. In the process, they discovered how threat actors approach their campaigns on the sector. We have Ricardo Duarte. He's the senior technical consultant with HP, sharing with us some of the findings. Good to speak to you, Mr. Duarte. Good afternoon.
Good afternoon, Ini, and again, thank you for the opportunity, and welcome to all your viewers.
Thank you so much for joining us. Well, it's interesting to know that, okay, with a whole lot of life moving to the virtual world, this shouldn't come as a surprise, and especially the financial sector, because that's where funds are, that's where liquidity is. So explain to us some of the major findings from your research.
Absolutely. I think it's obviously important to maybe just take a quick step back, right, and just set the tone. We've seen exponential threats that we're facing today increase hugely. I think by 235% since the start of the pandemic alone. So this time is really bringing us to the forefront of understanding how important security is, right? And we don't certainly feel that this is going to be slowing down by any stretch of any imagination right now. And absolutely, I think we, with our technology that we had out today, we were able to uncover a threat that was posed towards a West African bank. And, luckily for that individual as well as that organization, the threat was contained and obviously isolated and, protected. But this is a continual threat that we'll face, and obviously financial sector is most key, I think, because of the financial gain and opportunity for these threat actors to play out and try and exploit.
So with these findings that you have found, what can players, especially those in the financial sector, do to protect themselves?
Yeah, it's, I think a lot of investment's been spent by most of these companies in terms of protecting themselves. We certainly feel that doing a security assessment within the organization kind of allows them to identify any gaps that they may have or may not even be aware that they have. And these security assessments, professionally delivered security assessments, obviously, will highlight the gaps and allows the opportunity for those businesses to close those gaps and make sure that they're well covered.
Apart from businesses now, what about individuals? I mean, if you talk of the financial sector, individuals do have their stake there. It's their money. What can individuals do, on their own end to protect their investments and themselves?
Well, and I think, it's a good point, right? Individuals, it all starts with individuals, and then, those individuals work for organizations, and it kind of, feeds on from there, and, those threats can kind of spread very quickly within that. But if you're looking at an individual that's sitting, behind a remote office or at home doing, they always need to ensure that they have best-in-class security protection. They need to be aware of what protection they have, and they need to make sure that that's remained key, updated, and at the forefront. Because that's obviously the first line of defense. What we see is most threat actors are obviously, challenging endpoints like desktop computers, notebooks, printers, and those are typically the entry points in terms of gaining access to that individual. So, if you're sitting at home, you're doing investments, you need to make sure that you're running on world-class security, world-class hardware, because anything can happen at any time.
Yeah, well, we all have to be aware. It can happen at any time. Thank you so much, Mr. Duarte, Ricardo Duarte, Senior Technical Consultant with HP. Thank you for your findings and for sharing it with us.
Thank you, Ini. Absolutely. Thank you for having us.
Yeah. Just before we go, we move to Ghana. The Peasants Farmers Association of Ghana have bemoaned the unavailability of subsidized fertilizer to farmers, and that's because of outstanding debts owed to suppliers by the government. The association reveals that the government owes the suppliers an outstanding debt of about 346 million Ghana cedis since 2020. The fertilizer companies note that what they supplied in 2020, government still owe them 86 million cedis, and what they supplied in 2021, the government owes them 260 million cedis, and all this money hasn't been paid yet. Well, that's the program today. Thank you so much for being a part of it. Let's do it again tomorrow. I'm Ini John Mekwa.